Good afternoon, everybody. It is Sunday, April 14th, and we're going to do our CoT review for the reports that came out on Friday the 12th. Just again, a quick disclaimer, as always, that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll start again, as we do always, with the SPX. Biggest thing here is for the first time since October, commercials are net short. So we had the markup into the quarter end, and now they've gone net short. So we won't look too deep yet into our numbers for signals, as this is going to tell us that we're near the most short position in a 1 year. So we'll look more at the 3-year time frame. The max short position on a 3-year time frame is 287,000 contracts. So we've got quite a ways to go if that's what the direction is going to end up being. So 10,000 isn't enough to really scratch the surface, but this transition from net long to net short for the first time since October, it is important to watch, as it could be a phase transition. So we would want to watch for a couple scenarios: that to continue to grow over the next few weeks, or as earnings season is underway, for that to flip back to positive and then be supportive for earnings season as well as a summer markup. Really, that's the only thing. There aren't levels we're going to watch on this. We're just going to watch how this grows over time. If this does end up growing into a short position, then we'll go back to the end of 2021 and beginning of 22 to show comparisons. The next one we have here is Bitcoin, and commercials are running the show. Remember that we talked about when they had the long position, they would sell into those markups. They'd buy on the dips, sell into markups. Now they went net short. And big thing to remember on any instrument we're talking about is that catalysts may cause some people to interact in the market, but each market has a finite amount of tradable securities, so it's always a game of flows. Since commercials have gone net short, Bitcoin is down nearly 14%, which on 15 to 20,000 contracts is not too bad. Or I'm sorry, around 1,500 contracts. So 1,000 contracts isn't too bad. Major levels that we're going to watch in the week ahead will be 68,644, 66,315, 61,255, and then our longer term support right now is at 56,300. Again, when we talk about catalysts being the reason some people would interact with the market, we have a big one coming up next Saturday, the halving. The last halving, Bitcoin, as we headed into that, dropped 11.5% from that over that weekend. It happened in May of 2020, and May 8th, Bitcoin was up, and then May 11th, when the futures contracts, or if you look at a daily chart just from Monday through Friday, we saw that 11.5% drop. So we'll watch for that to play out again. That's likely the catalyst that commercials are positioning themselves short for. And we'll see that in these numbers as they come out next Friday, but then also in the levels that we're going to watch to see if that's what the agenda is. Just remember that the headlines are used or just uses marketing to move the markets. So the same way that a restaurant sends out coupons or does commercials, the pricing catalysts are the way that we carry out the advertisements and the move in the market in trading to bring people in or take them out. Gold and silver is still the same. Commercials continue to provide liquidity and building into short positions on both of these. Gold, the last time we've been at levels here was March of 2022 and June of 2021. We still have some room to go in terms of max exposure from those times. But not as much as we had before. We've talked about over time to how long these positions take to build and get out of. And what we see here is non-commercials are net long a lot of contracts. At their current levels, it would take about 5 weeks, 4 to 5 weeks, for them to get out of their position fully. They average about 20,000 contracts a week changing. And so at the current exposure levels of over 230,000. Their max levels they've changed contracts is 61,000. So it would take 4 weeks of maximum deleveraging to get out of these positions. So we're going to see them, some of these traders get trapped, and then that's what the commercials will use to pull that market back down. Silver, same thing, looks very similar to gold here. The max position on silver from a 3-year perspective is 77,000. We're currently sitting at 70,000. So we have about 10% more to go before we'll set new 3-year highs, or lows in this case, in terms of positioning. As mentioned last week in the video, 2811 was our major pivot, and that is where we held, and we can continue up right into where we had these stall outs before, when we had this same kind of position size. So that's why we had this 29.57 mark, and we went just over it right to 30, and then came right back down for a nice short on Friday. At the moment, the levels we'll want to pay attention to are 26.65, 27.33. 2811 still is going to be a big one. And then on the upside here, $30, just kind of even, we can watch comparing back to 2021 levels. On the downside, big downside would be 25.66, and that should hold if we were to come back down and test it. If that doesn't, then that'll tell you the overall picture on this is going to shift, and we're going to come back down to these low 22s. For now, you can ride the trend as long as we're over those support levels as mentioned. But again, as we push towards this 29.5, 30, that's where we'd look to exit there. And then this is where we'll look for, if 28.11 we can't get over there, then that tells us commercials are in control, and we will push back lower. In the currency market, the only one we're going to look at today is the 6S. Short-term trade momentum is at 1182, and failure there should result in a move back lower to 104. That's going to be our pivot for the week, as commercials have added a lot into support here, buying a lot of the contracts at a very high rate of change. This rate of change, so this amount of position changing, has only happened a handful of times in the last 2 years, and typically signals a larger shift coming. These are highlighted by the yellow arrows on this chart. So we've only had 6 of these since 2021. And the one that's not marked is at the far right, hard right edge here, which is where we're seeing that same thing. So a major position shift typically results in a larger move coming. And that's what we're going to watch for now. Again, so our pivot level is right here. Really over one spot 135 is where we'd have to see for a significant upside move, and then we'd look for 1 spot 19. Otherwise, we could continue down to the level mentioned last week at 1 spot 0756. These moves do take time to play out. So as we watch for these, if we get over that 1182 level, we can look for this to trend for a 3 to 6 week move, as these typically, when we get these shifts, they last for multiple weeks. It's not a 1-day kind of trade, although they can be explosive. They're likely to trend because these positions take time to unwind. And so with non-commercials net short and commercials net long, and at extremes, we are going to start seeing that battle take hold. This is our pivot that we'll watch for interaction. Again, if you want to learn how to do this analysis, how to trade with the flows, how to monitor flows of several different participants in the markets, check us out at Sticks Trading Academy, and stay safe trading out there this week.